Um, Let me tell you exactly what I did 3 weeks ago, because I want you to learn from my mistake in real time. On June 16th, for days after SpaceX went public in the biggest IPO in history, I opened my brokerage app, saw the stock ripping higher, felt that familiar burning feeling in my chest, and I bought shares at $210. That very same day, the stock peaked at around $225, and then it started falling. And falling. Today it's trading around $160. I'm down almost 25% in 3 weeks. Now, if you've ever bought a stock right before it dropped, you know that feeling. You check the app way too often. You start reading every headline hoping for good news. You tell yourself, it'll come back. But a small voice in your head keeps whispering, did I just make a huge mistake? Here's the thing, that feeling you get, that burning need to buy when everyone else is buying, it has a name, and it's the single most expensive emotion in all of investing. Today, I'm going to walk you through exactly what happened with SpaceX, why I got caught, what the actual numbers say about this company, and most importantly, the framework for deciding whether to sell, hold, or buy more when any stock you own drops hard. Because this exact situation is going to happen to you again and again in your investing life, and the people who have a system win while the people who have feelings lose. So let's start with what actually happened, because the story itself is wild. On June 12, 2026, SpaceX priced its IPO at $135 a share, raising around $75 billion, the largest initial public offering in stock market history. The demand was insane. On the first day, the stock jumped to around $161, valuing the company at over $2 trillion, making it the 6th most valuable company in America overnight. And then the retail frenzy kicked in. The next trading day, the stock climbed another 20%. By June 16th, 4 days after listing, it touched $225.64 intraday. That's a 67% gain from the IPO price. In 4 days, that's when I bought. And statistically, that's when most retail investors bought too, right near the top. There's a reason for that, and it's not because we're stupid. It's because our brains are wired for it. Psychologists call it FOMO, fear of missing out, but in markets it works like a very specific trap. The more a stock goes up, the more headlines it generates. The more headlines, the more people hear about it. The more people hear about it, the more buying pressure, which pushes the price up, which generates more headlines. It's a feedback loop, and it always ends the same way. When the last excited buyer has bought, there's nobody left to push the price higher, and gravity takes over. Think of it like a crowded theater. Everyone rushing in through the doors is what pushes the price up. But at some point the theater is full, and the moment a few people head for the exits, everyone notices, and suddenly the exits are jammed. I bought my ticket right as the theater hit capacity. Now here's where it gets interesting, because the question isn't, did the stock drop? The question is, why did it drop? And is the drop rational? And to answer that, we need to look at what the professionals were saying while retail investors like me were hitting the buy button. CFRA initiated coverage of SpaceX with a sell rating and a price target of $115, citing the company's extremely ambitious growth strategy, elevated valuation expectations, and massive capital intensity. Morningstar went even further. Their analyst valued the company at just $63 per share. That's less than a third of what I paid. And look, before you say analysts are always wrong, let's look at the actual numbers they were looking at, because this is where the story stops being about rockets and starts being about math. SpaceX lost nearly $5 billion in 2025. Its revenue last year was around $18.7 billion, which means at a $2 trillion valuation, the market was paying more than 100 times revenue, not earnings, revenue, for a company that loses money. For comparison, most healthy tech companies trade somewhere between 5 and 15 times revenue. Its capital expenditures in a single quarter hit $10.1 billion, more than double the year before, with most of that going into artificial intelligence infrastructure. This is a company that eats cash for breakfast. The only consistently profitable piece of the whole empire is Starlink, the satellite internet business, doing around $3.3 billion in quarterly revenue. So why did the stock even go so high in the first place? Here's the uncomfortable answer: it wasn't the financials. Even one longtime SpaceX shareholder called the valuation alarming, pointing out the company had been valued at $400 billion just 13 months before the IPO priced it near $1.8 trillion. He said the price reflected confidence in Elon Musk personally, more than any conventional financial metric. Read that again. A 5x jump in valuation in about a year, based largely on belief in one person. That's not a valuation, that's a vibe. And this is the metaphor I want you to burn into your memory. A stock price is like a rubber band attached to the actual value of the business. Hype can stretch that rubber band incredibly far, but the further it stretches from the underlying business, the more violently it snaps back. When I bought at 210, I wasn't buying SpaceX the business, I was buying SpaceX the story at maximum stretch. Now, there are two more mechanical reasons this stock has been under pressure, and almost no retail investors know about them, so pay attention because this applies to every IPO you'll ever consider. Reason 1, short sellers. Roughly a third of SpaceX's freely tradable shares are currently sold short, meaning professional investors are actively betting the price will fall. That's an enormous number, and it tells you how skeptical the smart money is at these prices, though ironically it also creates the potential for violent upward squeezes when shorts are forced to buy back shares. Reason 2, and this one is critical, the lockup expiration. When a company IPOs, insiders and early investors are typically banned from selling their shares for 180 days. SpaceX's insiders are sitting on massive paper fortunes, and there are accelerated provisions that let some of them sell even sooner, after certain benchmarks like quarterly earnings announcements. When that supply hits the market, it's like opening a dam, millions of new shares looking for buyers, all at once. Every experienced IPO investor circles the lockup expiration date on their calendar. I didn't because I was too busy watching the price go up. Okay, so that's the full picture. Overstretched valuation, money-losing business, analyst targets far below the current price, heavy short interest, and a wave of insider selling on the horizon. Sounds like I should just sell everything, right? Here's the thing, not so fast, because now we get to the other side of the trade, and it's genuinely compelling. SpaceX has roughly a 10-year technological lead over every competitor in reusable rockets. That's not hype, that's what independent analysts say. Starlink is growing from 10 million towards 17 million subscribers this year alone. The company has multi-billion-dollar contracts with NASA, the Pentagon, and major AI companies paying over $1 billion a month for computing capacity. Musk himself has floated the idea of reaching $1 trillion in annual revenue by 2030, and while I take that with a truckload of salt, even the skeptical analysts admit the building blocks for something enormous are in place. One analyst put it perfectly, this is a 20 to 25-year equity story, not a 25-day one. And that single sentence is the key to the entire decision. So here's the framework, the one I wish I'd used before buying, and the one I'm using now to decide what to do. Ask yourself 3 questions in this exact order. Question 1, has the business changed or just the price? A falling price alone tells you nothing. Rockets are still landing, Starlink is still growing, contracts are still signed. In my case, the business hasn't changed at all. What changed is that the hype premium is deflating. That distinction matters enormously, because you should only panic when the business breaks, not when the mood does. Question 2, what was your original time frame? If you bought planning to flip it in a month, you gambled and you lost, sell, take the lesson, it was tuition. But if you genuinely believe in the 20-year story, then a 25% drop 3 weeks in is noise. Zoom out on any chart of Amazon or Tesla and you'll find drops of 50, 60, even 70% along the way to massive returns. The investors who won weren't smarter, they just had longer clocks. Question 3, and be brutally honest, how much of your portfolio is this? If SpaceX is 5% of your money, you can afford to be patient and even buy more slowly. If it's 50% of your money, you don't have an investment, you have a lottery ticket with your future stapled to it, and you need to fix that regardless of where the price goes next. So what am I actually doing? I'm holding my shares because my honest time frame is 10+ years and my position size is small enough to sleep at night. But I am not buying the dip yet, and here's exactly why. The lockup expiration hasn't happened. Buying before that wave of insider supply hits the market is like buying umbrellas the day before the sun comes out. If I add shares, it'll be after that event in small pieces spread over months, a strategy called dollar cost averaging, which removes my emotions from the equation entirely. No more buying because my chest is burning, only buying on a schedule at prices I've decided in advance. And that's the real lesson of this whole video. It was never really about SpaceX. It's about the fact that the market transfers money from the impatient to the patient, from the emotional to the systematic, every single day. I paid $210 a share to relearn that lesson, and my mistake just became your free education. So here's what I want you to do right now. Open your portfolio, find the position you bought because of excitement rather than analysis, and run it through those 3 questions. Did the business change? What's my real time frame? And how big is this position? Write your answers down before the next market open. Because the next SpaceX, the next shiny IPO, the next viral stock, it's already on its way. And when it arrives, you'll either have a system or you'll have a burning feeling in your chest and a buy button. Choose the system. Your future self is counting on it.